Hello my fellow traders, I'm back with another review of one of my trades. Unfortunately, this is also one of a losing trade, one of my losing trades. And let's get right to it. It's ITUS, which has a very nice breakout that I was anticipating of buying, and there's a major lesson in this review, and that is to buy near key support, near key areas such as support and resistance areas, which this is at 525 at this break of this high. So what I should have done is to buy in anticipation of this breakout day before, and hold overnight. If I don't feel comfortable doing that, I should buy and then sell at the close, and then buy right at the open. But you should be comfortable holding overnight in this kind of setups, since it's somewhat, in my opinion at least, an ideal breakout pattern, due to the fact that these two tops here has a major volume. This is highly discussed in the Trading Tickers DVD by Tim Brittani, so that's where the idea comes from. Furthermore, there is clear resistance on the yearly chart at this level as well, from these bottoms here and some of these middle candles in here. So to summarize, it's a key area, and I have learned that I should buy near them instead of buying as they are getting overextended and way off their highs. But you gotta make them the mistakes to get burned and to learn, and therefore I'm paper trading, because I know I'm gonna make these kind of silly mistakes. But anyhow, this is how the trade looks, and as you've seen in the last video, I drawed out my arrows. Now it's the original data, so you can see here, no problem. Anyhow, it got the morning spike that isn't too weird, due to the fact that it had just broken out yesterday above the key area. The blue line represents the key area. So into yesterday's close, just the last couple of minutes, it nicely formed this uptrend, slow and steady, and then it spiked through the breakout area. And once again, if we refer back to Trading Tickers, this is one of the stages or things that I'm a bit not concerned about, but I don't know fully how to react to these things, because it's surely building up slowly, but then it spikes. And in Trading Tickers, we're told to not buy straight up spikes, because then they usually pull back. So that's something. If you have any more experience than I have, please feel free to comment, and I gladly discuss it with you. But furthermore, it spiked hard, and as you can see, we got that pullback. I was anticipating it, but and then as I looked at the 5-minute candles instead of the 1 minute, I saw this forming up of a potential breakout of this consolidation area. But as I bought up here, I also noticed that I bought a double top, and I wanted to give it a bit of a wiggle room, so I set my risk of 6-ish, or 599 due to the fact that 6 is a psychological round number. I wanted to see if buyers were coming in at that point, so I set it just below, and I'm very glad that I got out as quickly as I did, due to the fact that it dropped quite hard. It pulled back quite hard. And the end of day results, I don't know yet, because apparently we're not in end of day mode. But regardless of the end of day result, the major lesson is still that you should anticipate the key areas and buy, risking off them, not chasing up at these levels. I'm very glad that I got to share this with you, and I'm very glad that I have learned that, and hopefully, or at least I know I won't do it again, and hopefully you guys can learn something from this, and until next time, have a nice one.